Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, August 14th, 2023. So, we saw a bounce today. Should be no surprise. That's what I put in the morning notes today. Was even though we saw the futures were down some, I said the pattern we're seeing buy signals right now, and we're entering, a pretty good support area here. So I said, getting aggressive or putting new money to work on the short end here, it's only asking for trouble. And I said, there's an odds that we could just take these out because of all the divergences that were ignored on the way up. So it could have gone and just taken out these lows here and made it down to the somewhere into the 44.20. That would have made perfect sense. But the thing is about shorting down here, when you have buy signals on the 15-minute chart, when you have buy signals on the 60-minute chart, you have to anticipate that we're going to get some type of bounce. And what you really do is you just kind of wait for the bounce and then use it to short. So that's why it's good to know the overall direction. Like we're looking at it as it being on the downside. That's our preferred pattern. But we're going to get these moves back and forth, and if you can just step in and out, you can do pretty well, with these. And that's why, even though I'm believing the intermediate term, these lows are taken out and we're heading down here. I don't want to sit there and say just short, just short, just short when we're, if I'm anticipating we're going to get a decent bounce in this right now, from 44.44 up to 44.48, 44 points altogether. So it's a decent, nice little bounce. But right now we're at an inflection point right here where you can see the moving averages are starting to converge together. And then also, notice this pattern that I have here. This is the bullish wedge that's in place here. And the way that I'm looking at it is you have your, one here, just say it doesn't make a difference, either one of these two lows, but one, two, three, four. And if this pattern is going to be correct, what it's actually looking for is another move to the downside, meaning that as long as it keeps this wedge pattern, meaning that it stays kind of converging like a tip right here, then it's still a wedge and we can go up higher. So really the way that we could look at this pattern being broke is if we simply just take it like this and draw a parallel line and bring it and say, okay, if it takes out this, then it's no longer going to be that bullish wedge. It's just going to be a little channel that's going down. But as long as it stays, within this wedge pattern, so let's just say it goes here, in this range and like this, the pattern would still be, so if it came up and came down, then what happens is this is the target on it right here. So let's just say this pattern works out exactly as planned, and let's just draw it. So let's just say from here we come down, and we because the way this pattern is set up is that it's allowed to break this trend line. This is what sucks in either the bulls or the bears, because this is a bullish or a bearish pattern. It's just a matter of which way it's on. So it's allowed to break, but this is the way the pattern would be. Would we topped anywhere from here up to here, come down, either a test, just test this line here or break it, and then this would be the pattern target. So that's the way this pattern would look like if it works out like that. If it keeps this wedged look, comes down, takes out the lows, and then this is what you would be anticipating the next move to go. Again, it's not a guarantee that this this is the pattern that's in play right now, but it's definitely something we want to keep an eye on with it. So we don't really have any. We had buy signals. We don't have any sell signals yet. 15-minute chart on the 15-minute chart. Not really. We don't really have a whole lot of divergences either. So tomorrow you want to remain open-minded. This looks like it's just consolidation. So the next move should be to the downside, and really it would stay that way until the bulls can take out the 45.26. Until they do that, the bears are in short-term control, and this pattern's looking for lower, and then we have another spike up. So you'd be looking to, if we get up to these levels, this is where you'd be looking to short. always leaving the door open that they may come up and try to close that gap. You got to leave this worried. But when you get up to this resistance zone, if you don't have a position in place, this is where you want to be shorting. You could short, take a little bit here at where we are. Wait, see if we get up to this to the 45.23. Take some there, maybe take a little up at 45.44, and then up at the gap. So you layer up there. Now we may not get up to these levels, but what will happen is you may have a half a position. Then when we break down, you just wait for the next bounce and you just start adding to your position. So that's really the way to trade this right now. But the bounce was anticipated. It was warned in the morning notes not to get aggressively short down here because you're only asking for trouble. We're getting the bounce right now. So let's see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you guys in the morning.